What's going on, everyone? My name is Nicholas Merton here at Data Dash, and today is June 11th of 2020. Well, folks, I hope y'all are having a fantastic day wherever you are. And in today's video, we've got a lot of key topics to discuss. We're going to be talking about the continued confidence in altcoin markets as DeFi and other industries of the crypto space continue to lead forward. We're going to be talking about the data science related to Bitcoin to see where we are at in the cycle, and also talk about the broader equity markets. Is this the new normal to see companies that are bankrupt and practically have no serious fundamentals leading the way and seeing double-digit, if not triple-digit gains in a single day? So we got to talk about all of this and more, and we've also got a sponsored interview with Mauricio from Ledn.io towards the end of the video, so stay tuned. You won't want to miss it. Now, I already went through and actually did the whole video, guys. I accidentally forgot to hit the record button out of all things. I want to be a YouTuber, but I can't even hit the record button. Anyways, let's go ahead and just dive again through it. I want to go ahead and take a look across the board for cryptocurrency markets. As we can see here, the vast majority of cryptocurrencies are in green territory here. Again, as we've started to see a lot more confidence enter into the small and mid caps. And today, the only difference is that we're not just seeing it really in DeFi plays. We are seeing it in DeFi plays, of course. We still have some that are up 5, 10, 15%. But we also have a variety of other protocols doing well. Horizon, VeChain, Digibyte, Zilliqa, Ren, all up in double-digit territory. Ren was just tailoring up around 20% a couple of minutes ago. But we can see that there's a lot of solid plays here, and some of them starting to step into supply chain logistics, privacy blockchains, peer-to-peer digital currencies, protocols. It's really nice to see that there's a little bit more diversity here in the sense of the performance, and it just seems like the broader narrative of excitement around altcoins is picking up. And again, a lot of these are great projects. You also have Alf, Coin, Numeraire, I haven't seen that in a long time, Synthetics Network, and Aave and Celsius, so a good amount of DeFi plays here. Augur, Kyber Network still holding the vast majority of its gains here. Really good to see this. It's really nice to see. Now, speaking to the broader altcoin space here, though, have we seen any major moves? No. We haven't. And the reason why is because these are small and mid caps. In order to really see altcoin dominance and gain, we not only need to see a multitude of days like this for the small to mid caps to where they start to grow into some of the larger players, but also we need to see ETH, Litecoin, Bitcoin Cash, XRP, some of these larger plays start to move. And we haven't seen that momentum come in just yet. Right? The charts are looking good. If you take a look at Ethereum, we'll go ahead and pull it up here, ETHBTC. If you take a look at Binance here, right? We're getting very close to possibly setting in a higher high. We're pressing up very much against what would be generally seen as the line of resistance. If you take a look here, we've already kind of broken up above the highs there. Depends on how you want to draw the line. If you want to draw it lower, right? No matter how much, which way you want to go about approaching your trend lines here. We have basically kind of, in a sense, gotten to a higher level, or we've gotten close to breaking through here, right? It's kind of hard to argue that we haven't. It's a matter of seeing the follow through and the momentum here and the volume and starting to see buyers apply pressure here and get ETH above to a higher level. Now, the big reason for a lot of those altcoins gaining is that Coinbase is continuing to explore new assets for the platform. And we know that Coinbase is a big provider of liquidity alongside Binance and Kraken and some of the major exchanges out there. So these are not the tokens that they are guaranteed to list, but they are exploring these. And as you can guess, I was watching it as the article came out yesterday. I just happened to catch it on Twitter. In a matter of a couple of minutes afterwards, you start seeing all these different cryptos performing quite nicely. Aave, for example, another DeFi play. Ren, which we talked about a lot. Render token, Aragon, one of the longest standing, ICOs in the space. Bancor, Comp token for the Compound protocol. Numeraire, VeChain, Synthetics, Digibyte. All these different cryptos are possible ones that Coinbase is looking at. And you can see that a lot of these probably look familiar to the list of projects that are leading the market right now. And then there's a bit of excitement because this is opening up altcoins to a broader audience here, and it is going to open up liquidity for some of these projects, many of which have a lot of great potential and have built great products, but they just can't reach out to a large range of users. So this not only opens up the room for speculators, but it also opens up room for potential investors in this case who might actually want to utilize the protocols, right? So anyways, going to this, one of the key ones that, again, has been one of our plays is Ren. Now, interestingly enough, we've not only been long on Ren for the long period of time here. I've personally been long on Ren and talking about it throughout 2019 and 2020. But outside of that as well, we also in the newsletter here went long, or I personally went even more confident here on Ren back in June. It was one of our top 3 picks for the newsletter here. So I'll go ahead and show you guys. This is what it looks like here for the kind of opening page here for the crypto sentiment. We actually switched out basic attention token for Ren alongside our other 2 picks, Chainlink and Kyber Network. So again, this is the kind of stuff that we talk about in our newsletter here. I basically went confident on Ren after the post mainnet sell-off because, quite frankly, as you can see with the volume here, and also the follow through in price, plays like Ren here, I don't think are going to cap out right when they release mainnet. In fact, that's when you can actually realize the most potential. It's just common that you get a sell off here because there's a lot of hype usually going into it, as we saw here in price. But I think Ren is going to be one of the longer term plays. And if you take a look at the monthly, right, this is looking very, very clear here, right? Higher lows here, consistent up months here. And again, looking like it might want to finally break out past the previous highs here of what we saw back in previous cycles. So again, very interesting stuff. Now, going to take a look at Bitcoin here. I want to go ahead and dive into Bitcoin's price, take a look at the data science. Right now, we're seeing the fear grid index at relatively neutral territory, waiting for that breakout to a higher level from what we saw back here in February at the cap around 10,600. We'll see if we can get it here. All in all, though, we're not overbought to any degree. We're quite neutral right now, very far from where we were back a year ago, where we were on like the upper 80 to 90 point range for Bitcoin back in last year. And it's crazy to think we've been basically pushing sideways for over a year here. But I think this is finally looking, if we take a look at the longer term chart, it looks like we're finally starting to come up here and eventually break out above the previous highs and kick off for the next cycle. Who knows how fast we're going to do it, guys? The key thing to keep in mind, we've got 12 months more than what we took in the last cycle, most likely. And that's going to cap us out around the top of November of 2022. Now, if you want to see how long that's going to be from where we're at right now, it's going to be about 28 months. 28 months here, so more than 2 years until we reach that peak, at least to our estimation. It's not a guarantee that it's going to cap out there exactly. It might happen sooner, it might happen later. I think this is a very conservative estimate, though. We're just following what history teaches us. We're adding anywhere from around 11 to 13 months, so roughing it out, we're doing November, which is 12 additional months from the length of the last previous cycle from the bottom here. So hopefully that makes sense to you guys. Again, if you have any questions, feel free to leave it down in the comments down below, and I'd be happy to clarify it. Anyways, let's go ahead and dive into some of the data science here for Bitcoin. And I want to start off by taking a look at one of my favorites, the HODL wave, or specifically the 1-year HODL wave, which takes a look at the unspent transaction outputs of Bitcoin, basically when the transaction was last spent for Bitcoin. And we can see here that over 61% of Bitcoin, the highest level since back here in May of 2016 as we were kicking off the next cycle, this basically means that over 61% of Bitcoin has not moved in over a year. This is incredible stuff, taking in the significance of this and also seeing what generally looks like a trend of higher lows and higher highs, meaning that we're probably going to climb to higher levels like 65 to 70% here over the next few months. I'm really intrigued to see this. And I think as we see things like Grayscale, as we start to see more investment funds starting to bring Bitcoin into more of an institutional light, I think that you're going to start to see this more and more. So I'm very, very interested to see that. And to really get excited for the altcoin cycle, you're going to want to see a decline here in the HODL wave where people are starting to circulate their Bitcoin and starting to go into different types of assets. Taking a look at the stock to flow model, we're right exactly where we should be. Nothing to complicate here. Again, the change in color is meaning that we're entering into the next cycle here, or the next wait time until the next halving event. So this is basically right on line for where we should be. The Poil multiple had a severe drop here. Again, the daily issuance of Bitcoin, in this case, dropped pretty significantly as we had the halving event back in May. And now we're at very healthy low levels here that gives us a lot of room to possibly go towards higher levels before we get into overbought territory. So you can see here again, the Poil multiple gets high when the price starts to go up towards where the market's going to peak. And the last thing I want to take a look at, days of profitability for Bitcoin. For 95% of its history, you either are in the money in this case, you're up on your money, right? Or you're neutral in this case in your position. So really good to see this. Only in a few periods of FOMO are you down in your position. So this means that for the vast majority of traders, Bitcoin has been profitable if you've been simply just hodling in this case. Maybe not traders. Anyways, taking a look here at traditional markets, I want to go ahead and talk about this kind of broader topic of, the kind of new norm we're living in. Many people have been talking about the crazy stories of Hertz and all these different companies that have declared bankruptcy and now they're rallying to relative highs that they haven't seen in a year or 2 years, even with everything going on with COVID, right? So are we living in irrational times? Yeah, we're living in pretty irrational times, but there's a reason why people are acting irrational that's actually quite fundamental, and we'll kind of build into that here. So taking a look, global stocks are trading at their highest valuation since 2002. As we started to cool off from the dot-com bubble, we have not seen valuations as high as we have since back in 2002 during that time period. And a lot of people look at this kind of more than V-shaped recovery here, going from around a 12 ratio here for taking in the forward price to earnings, which is basically what are forward expectations for corporate earnings versus the current price, right? We've gone from around 12 to 20. And many people would say that this is overbought here, right? And especially considering the fact that right now, corporate earnings have declined quite significantly and equities have already rebounded back to their all-time highs. This divergence has startled a lot of people, and many people think that, can this go on for a long period of time? What's causing this? Well, I think we know what's causing it, guys. It's Fed liquidity. We know that the Fed is acting as a guaranteed buyer here for bonds, and eventually it's going to be ETFs. They've already started buying bond ETFs. That's one thing they've done. But they're going to start buying up equity ETFs. They're going to push interest rates down into negative territory, and they're just going to print. They can do that. And other central banks across the world can do that. We have infinite liquidity here at our disposal, and it's made it very clear that the Fed will not even tolerate a 20, 30% dip in the market like we saw back with COVID. No, they're not going to allow that to happen. So you have a guaranteed buyer. And what does that cause? Well, it causes everyday retail traders, institutional investors to basically become guaranteed buyers because they know the Fed is going to buy. So it causes this positive feedback loop. It's really not a positive thing in the long term for the vast majority of people, but for equity markets and assets abroad, it creates a positive feedback loop where there's constant amount of buyers and little to no sellers, right? And this is a very important thing to keep in mind here when you're taking a look at the valuation of equities. Even though we rallied on spot price to all-time highs, it's important to account for the increase in the base monetary supply. If you account for M2 money supply, so this is the S&P 500 market capitalization relative to the M2 monetary supply, we're actually still quite low. This is a really important thing to keep in mind here. So again, when you factor in for that increase in the broader money supply, the rally doesn't seem too crazy. In fact, it probably leaves us with a little bit more room to climb as we're starting to enter into a period of more optimism and recovery. As people are starting to travel again, people are starting to spend a little bit more. We're starting to get the economy back to some degree. Now, you can also see this in property markets. It's not just equity markets. Mortgage loan applications to purchase a home are back to the highs we saw back in 2019. And the important thing to take into mind is this is even higher than where we were previously against COVID. Why? Because interest rates are so low. People are taking out mortgages. Mortgage rates are extremely cheap right now. People are taking advantage of it. Sad thing is, this isn't going for people who actually need to buy a property or, lower end Americans. They probably don't have the credit rating to do it. They can barely probably get by and afford to pay, on their base mortgage in this case, even if the rates, the interest rate of the mortgage might be low. But of course, wealthy investors, people who are doing property investments, people who are higher income brackets who have actually done quite well with all the profit they've made in the stock market, well, maybe you or I or other people can go out and buy properties. Doesn't seem very fair to me. Taking a look at the recovery, though, the question here is, what if we're in the bottom, right? Taking a look at this chart, we can see the decline here post-COVID-19 and the recovery post-COVID-19. I think it's a very interesting question whether or not this is the bottom here. And what a more interesting time. There couldn't be a more interesting time to have this pullback in the market and then this dramatic recovery, because I think many people were tying what we saw here in regards to the sell side with the Great Depression in the 1930s. But what if we haven't even seen our bubble yet, our roaring 20s? That's the really interesting question. We are living in 2020 after all, a century from back in 1920. Could it be that this is the beginning stages of the final peak, right? Maybe, the dot-com bubble was crazy. Maybe the housing bubble was crazy. And yes, even the last more than decade has been crazy as the Fed has injected pretty large amounts of QE even before COVID-19. But now it's become very apparent that the Fed, as much as it's said time and time again that it's not going to do this or that they will do anything to prop up equity markets, that they'll keep the punch bowl full, they'll keep the speculation going, they'll buy junk bonds that were supposed to be defaulted because people knew that they were crappy bonds. They will continue to print money and lend out to any single business who needs it at the end of the day. They will continue to buy up different types of ETFs. They'll eventually buy into equities. They'll start being a major shareholder just like Japan. We've seen this for the last decade in Japan. The US is going to follow suit. And every other central bank is going to do the exact same thing because they have to keep this bubble going. And they're going to lower interest rates down to negative territory. They're going to do everything to keep this train going. And they'll print as much as they need to. And that's why, this is taking a look at the S&P 500 or the Dow Jones. The Nasdaq's already breaking out to all-time highs. Nasdaq 10,000 is already probably, priced in. We're going to keep on climbing. And it's why you don't bet against the Fed, guys. As crazy as this is, as crazy as it is to see companies like Hertz, as we talked about, you guys can look into it, HERTZ, if you don't know the company, car rental company. It declares bankruptcy. Goes down to $1 or $2 a share. Now, last time I checked, I think it was around like $8, $10. I think it started to pull back a little bit, but how does that happen? Higher than where it was before it declared bankruptcy, before everything went on with COVID. Doesn't make sense, right? Right? It doesn't make sense. But we don't argue against it because it's the trend, right? We don't fight the trend. And second off, do not fight a guaranteed buyer. And that's what the Fed is. Right now, if you're out there screaming the fundamentals are not sound, you guys are 100% correct. You're 100% correct. Take a look here. This is the share of zombie companies in the United States. The amount of companies in the U.S. that can't even pay down the interest that they're accruing on their debt. Not the base principal, right? It'd be one thing, right? Of course, if companies are struggling a little bit to pay with their debt, right? Sometimes it's hard to make payments and you might have to restructure debt. It's another thing when you can't even just pay the interest on it. That is a scary sign. And it's over nearly 20% of companies in the United States versus back here in 2008 where it was around 6 to 7%. This is terrible, guys. The fundamental truth that this chart shows is everything you guys are probably screaming. You're screaming that the economy is broken. It's not working for everyday people. The state of our companies, they're indebted. It's all at the end of the day, it's not sustainable in the long term, and you're very right about that. But until that day comes where something does eventually snap, something doesn't work, and the Fed can no longer combat it, we have to not fight the trend. We're in our roaring 20s. The punch bowl is full. You can either have your money sitting in a savings account that's going to dwindle away from the continuous printing of the Federal Reserve, the continuous fractional reserves that the banking system creates as it's continued to create credit and loans, or you have to position yourself in equities or other types of assets. I'm not going to tell you guys what to do. You got to make the decision for yourselves. Right? I have positions in equities. I have some very small positions in precious metals that I'm looking to build up over time. And also, I'm mainly positioned in cryptocurrencies. Right? And taking into that longer term view here, right? Again, what asset class has the two benefits of having the room for growth that we're looking for, the multiples that could really bring in a great return, and along with that as well, the absolute kind of separation from traditional governments, markets. What kind of asset is completely separate from these global systems? I'd say gold and silver, and then we've also got Bitcoin. Because gold and silver, as much as they're going to act as a hedge, they don't have the ability to multiply like Bitcoin does. Bitcoin is around $160, $170 billion market cap right now. Gold is more than a $10 trillion market. Which one of those is going to double in the next year? Which one's more likely to double? Maybe over the next 2 years. Which one's more likely to 3, 5, 10x over the next decade? I'll let you be the judge of that. But all in all, I hope you all are doing fantastic wherever you are. If you like this video, drop a like. Let's go ahead and dive into this really exciting interview with Mauricio from Ledn.io. Alrighty, everyone. So in today's sponsored interview, I'm sitting down with my good friend Mauricio, who is one of the co-founders of Ledn.io, one of the most prominent lending partners in the cryptocurrency space. Mauricio, thank you for coming on to the show today. It's great to always catch up to you and have these kind of quick fireside chats about what's going on in your guys' company, as well as the broader cryptocurrency and macro picture.
Yeah, absolutely, Nick. Always fun to sit here and chat macro and Bitcoin with you.
Yeah, man. So I think you guys are especially positioned well. I mean, obviously you have history, coming from Venezuela and having such a long history in the cryptocurrency space. And speaking towards Venezuela and Latin America in general, there's been a lot going on in regards to some of the geopolitical issues in the local area that have to do with, food pricing, a lot of scares in the region. So I want to go ahead and let you take some time to talk about that. I know it's a little bit outside of the realm of crypto, but I think as most things, it kind of ties back to crypto at the end of the day.
Yeah, absolutely. We see it as an absolute driving force in crypto adoption globally. So Ledn is a global company. We are based in Canada, and we provide the saving and credit services for Bitcoin and USDC, just digital assets. Uh, Obviously, a big use case for our product comes from countries that have high inflation and basically no real stable banking options for them. So a strong presence, just by my background and a lot of our pre-existing network, and the fact that a lot of our team members are from Latin America, is that we do have a strong presence in Latin America and many countries in Latin America. And we do get to see in our data now, essentially the effects or results of some of these macro events that occur in the region. And we see it reflected in our numbers. So not surprisingly, just to, I guess, get you caught up on a little bit of what's going on, earlier this week, the Argentinian government just basically filed to execute its first expropriation. And basically that means they are taking over a private company because by a government decree. This is very scary. Very scary because it's exactly the textbook that Venezuela followed when producers and the production apparatus, essentially private businesses that run the farms, manage the distribution for food, as well as manufacturing. When the currencies start going out of whack, they have a lot of things to manage, and a lot of them aren't able to do so. So in this case of Vicentin, which was a soy producer, one of the largest soy producers in Argentina, they had filed for bankruptcy last year because they couldn't basically afford all the wild currency swings that happened once the leftist government came into power. So what this government did is essentially took over. They're now going ahead to take over the soy plant because they think they can run it better than the previous people that were in charge, which is the line of thinking that a lot of these totalitarian governments have. So they start slowly. Usually in Venezuela, it started very similarly. It started, I believe, with a chicken producer, and then it went on to meat, and then it went on to rice, and then it went on to other things. And slowly but surely, everything the government took over stopped working, and basically you became entirely dependent on imports, which made your currency situation even worse. So it's just essentially a downward spiral. And we saw that in Argentina recently. We saw numbers spike as far as registrations from Argentina. People ask us questions, even though we're not an on-ramp in Argentina. People come to us and ask us where they can buy Bitcoin and USDC because they want to opt out of their system really badly. So what we've done actually as a result of that, because we were getting a ton of inquiries from these local residents and where they could buy Bitcoins, we put a page on the site where we now refer them to what we think are reputable on-ramps in those markets so that they can purchase the USDC and Bitcoin they need to use our services.
So to speak to that, Mauricio, and kind of take a step back, the broader picture here is that we see the domino effect happening in Latin America. Venezuela was kind of the poster child of hyperinflation, but we've been talking here on the channel about Argentina, and eventually, I believe, and you may agree or disagree on this, Brazil and a few other countries following suit as well. And what's happening here is that governments, for some odd reason, as they always like to pin the blame on someone other than themselves, they feel the need to say that, oh, corporations are price gouging people, when in reality, they're just adjusting to the ridiculous levels of inflation that the government has printed, and therefore they're taking the authoritative step of taking more control over these producers. It's a scary situation. If that happened here in the U.S., there would probably be, serious rise or serious anger from the general public.
Yeah, and in fact, there have been riots. So there's a video circulating about when the government actually sent their reps to the factory to do like their first inspection or whatever. There was this huge mass of people rejecting that they were there. Essentially, they booed them out of the site when they first arrived. It's just as a sign of there are large amounts of people that are against this, people that understand where this goes, right? But by and large, what the government is very effective at doing in these situations is saying, we're the democratically elected government. We're going to take over this company and we're going to deliver the goods that this company was producing at a cheaper price. Because they have the ability to print endless resources, they find a way to masquerade whatever else they need to basically take money from to make that system work. So that optically speaking, they'll spin it so that they'll make the company look like the boogeyman. And it's very hard to fight that narrative because the government, especially totalitarian governments, start becoming more controlling of the media. So even in Venezuela, for example, the first thing Chavez was doing two things in parallel. As he was taking over companies, he was no longer renewing broadcasting licenses and permits from opposing media. So it's a dual effect because really the only thing that saves you from a totalitarian government or can potentially save you is a robust free press and strong institutions. In countries that have compromised press liberties as well as compromised institutions, it's just way easier to go down that hill.
Yeah, speaking of that, Mauricio, again, I think as you were mentioning, in order to keep that system sustained, they're going to have to pull from some other kind of industry. Eventually, it comes down and eventually hurts the general public in some way, shape, or form. But as you mentioned, it's the constant maintaining of that narrative to make sure that whatever you do is always seen as successful, and it even goes as far as censoring out the media. So, I mean, man, it's an incredibly tragic story, I think, for such a wonderful place like Argentina, and generally speaking in Latin America. But I wanted to go ahead, Mauricio, as you were talking about, you guys are seeing an influx of new users and interest from regions like Argentina. And we've talked a lot about Latin America being a hotspot in this case. What are some of those, if you can, maybe talk about some of those growth numbers? And then outside of that, what are some of the key services that they're really interested in? I know you mentioned the USDC savings account in that case.
Yeah, so I can share some of our growth numbers for May. So May was our best, highest growth number on record for registered users. We grew our registered user base by 20% in just a month. And that was on the back of the Genesis announcement, which of course is a great announcement for us and a great benefit to our clients because now they're working with in collaboration with the top lending institution in the space. So that was a big positive and a big driver. As far as the services that we get requested on or requests most often would be our Bitcoin savings account and our USDC savings account. At the beginning, we used to get a lot more requests for our Bitcoin-backed loans. What we see now is more people trying to save, and the other product that's still very popular is B2X. So that's a product where people take Bitcoin that they already have and double the Bitcoin they own through a loan. So they're betting, or I guess expecting, the price of Bitcoin to increase over time. And those products are moving very strongly. I think big interest is coming from the USDC savings account as well, just because people now see USDC as a way to hold and move dollars around. And in those markets in particular, they have very poor digital banking infrastructure.
Yeah, as you mentioned, if you can provide some on-ramps, and there's a variety of Latin American exchanges that can get you into either USDC or Bitcoin or different forms of cryptocurrencies. The moment you have that on-ramp, even though it takes a few additional steps, even though, for example, here in the US, a lot of people won't go through the process of actually registering an account because for them it's too complex. For someone in Latin America, it's a life or death scenario in some cases. It's a matter of being able to preserve your wealth and be able to store the wealth that you built up for all these years and preserve it for the next few years. But outside of that, if you don't take these steps, then you're at the whim of the government and central banks. So I think that there's a really true narrative here, Mauricio. And I think it's so cool that you guys have built your services to reach that audience, to do so in a compliant way, but also to be able to reach out to these individuals in areas that I think really a lot of crypto companies don't service or at least prioritize to any degree. And I think there couldn't be a better match here for your guys' product in that case. So if people want to kind of hear a little bit about what you guys do at Ledn and maybe start to kind of delve into some of these services, what's the best place for them to go to?
Yeah, so our site is ledn.io. There will be a link, I believe, on the show notes so people can follow. We are HODL with Ledn at Twitter, and they can find me at Cryptonomist with an A at the end on Twitter. But support at Ledn if you have any questions. And yeah, we're a Canadian company. We do serve Canada and a lot of the US. So feel free to pop in, ask questions, and would love to show you what we built.
Awesome, Mauricio. It's awesome to hear, man. And honestly, well, like as Mauricio had mentioned, everyone, we'll leave some links down below in the description so you can find more information on how you can actually get access to Ledn services, as well as be able to follow the guys at the team and stuff. They've been doing a phenomenal job. So, Mauricio, thank you, man, for making the time. Thank you for the interesting story as well about what's going on in Latin America, the important update of what's going on there. And I think we wish not only the best of luck to you guys, but also the best of luck to those in Argentina and those affected by the current status and the geopolitics of things.
Yeah, that's what we're here for. We're here to help in this time of turmoil.
Awesome, man. Sounds good. I'll talk to you soon.
Take care, Nick.